What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be taking a look at super microcomputer stock. This is ticker S, and I have to say, this is a very interesting stock right now with a very interesting valuation in a very interesting situation. So, this stock has had a crazy year. Earlier this year, this stock was up to $118 a share, and now we're all the way down to 21. And in this article, you can see that in the last couple months, it's taken a hit because of regulatory concerns following allegations of accounting manipulation and other issues. So that's the problem, right? And they were it looked like they were about to get delisted, but it says the NASDAQ warned Supermicro it would be delisted if it does not file the report or submit a plan by Monday. And the shares recently soared. You can see in the last couple days, the stock's up almost 20% because they are expected to file a plan for its delayed annual report by Monday that could help it avoid being delisted. So that's some good news in a kind of a sketchy situation, I guess you can say. But this stock has had an insane growth of revenue. So here's the last couple of years of, let's look at the last 5 years of this stock. So in the last 12 months, this company has done nearly 15. Well, this is based off of Q2 numbers, which, at this point is getting almost outdated, but $15 billion as of the end of Q2 of this year. Okay. So their revenue jumped huge. Free cash flow is negative, but net income was positive, which is really what we're looking for here. Net income is looking super strong, so I'm happy with that. Then we have the cash to debt ratio is almost the same, so it's kind of just neutral. It's not healthy, but it's not horrible. Shares outstanding was starting to increase, which is not what we want, but if everything else is good, then I can look past it. ROI was only 4%, not very good. But the interesting thing is, here we go. Analysts have them doing 69% revenue growth this year, and then it drops to 19% for next year. But still, that's not bad. That's still those are pretty good numbers. EPS going to 2.9 this year up to 3.7, right? So if we do the current share price of, let's say, $21 a share divided by next year's earnings, the stock's only trading at 5 times earnings right now, which is insane. Then we go look at the PE ratio history. This stock trades anywhere from a 7 up to 32, let's say. But we'll call the average about a 20 or a 22, somewhere in here, right? Let's say 20. Well, this right now the stock's at 9 times trailing earnings and 5 times forward earnings. That means like this stock can, as long as if news comes out about them not getting delisted and they are all, set with their annual report and all that stuff, this stock can probably run back up to $80 a share, $90 a share. So that's where this is looking like a really good opportunity to, at least 3x, 4x your money in a pretty short period of time. If they're going to be growing revenue that much, I mean, 5 times forward earnings is insane. You don't see that ever. You don't see any company. The only time you see that is when a company is going out of business. So it is kind of sketchy, kind of suspicious what's going on right now, but the valuation is insanely low. I didn't mention yet, the equity on the balance sheet is $5 billion. Right now, this market cap is only 10 billion. So you're getting half of the market cap already in equity. And then they're supposed to be growing 20% next year. So equity. Now remember, the cash to debt ratio was equal. So not ideal, but the equity has gone from 1.7 billion a couple years ago to now over 5 billion. Okay. So over $5 billion. Then let's check here. So they're doing net income. We'll do it here. I want to do it. Well, okay, that's fine. Trailing 12 months, annual 1.2. So if their earnings is expected to go up as much as they're saying, we're looking at least 1.5 billion in earnings, right? So you're getting an $11 billion company that's going to do at least 1.5 billion on the bottom line, plus over 5 billion of equity on the balance sheet. This is an incredibly interesting scenario. This is I kind of want to buy this, but I need to think about it more and probably do some further research. But this is very interesting. So I must say this has a very good chance of jumping up to, who knows, $80 a share, let's say. But there's a lot of opportunity here. I'm just sort of skeptical, so you got to really think about it and be careful. But there's a good chance that this stock can have a huge run in the next 6 months, 12 months, or whatever. So thank you for watching. I will see you in the next video.